Federal Reserve went ahead with a 25 basis point rate hike, even as banks tighten credit. Will these forces push us into recession?
There's a lot going on in the investment world right now. In this video, with the help of ChatGPT, we are going to prepare for a possible recession by looking for investments that have performed well during past recessions. Like depicted in the famous movie It's a Wonderful Life, there have been several major bank runs in the US during the past 130 years. Things are not as good as they were 2 to 3 years ago. In addition, several famous investors have also come out and said that a recession will happen.
We've been talking about this for a while, and I think that the recession is here in a few months.
So I don't know. I think it's probably a good idea to prepare for a recession. And so that's what we're gonna do today, and I have a secret weapon, ChatGPT. So with the help of ChatGPT, there were two main things that I wanted to find out. Number one, which investments performed best during the Great Recession and prior recessions? And number two, how did those investments do from a percentage standpoint? How did the individual investments do from a percentage standpoint? And what I found out was really interesting. So yeah, the first thing I'm going to ask is which investment categories performed well during the Great Recession? So it says, during the Great Recession of 2008-2009, many asset classes experienced significant declines. However, some categories performed better than others. So the first thing they say are treasury bonds. So when economic conditions are uncertain, investors often flock to treasury bonds, which are backed by the full faith and credit of the U.S. government. So not to bore you to death, I'm just going to give you a quick rundown of what I did next. I asked ChatGPT to give me a list of treasury bond ETFs, longer-term treasury bond ETFs with a low fixed cost, and it gave me a list of 4. Out of the 4, I was kind of interested in all of them, but I wanted to see how they performed during past recessions. So I followed up by asking ChatGPT, how did these 4 perform during past recessions? And so what I found was 2 in particular stood out. The iShares 20-plus year Treasury Bond ETF, TLT, during 2008, it returned over 30%. During COVID-19, it returned 18% or over 18%. And the second Treasury ETF that stood out was the Vanguard Extended Duration Treasury ETF, EDV. And that had a return of over 60% during the financial crisis and over 40% during the COVID-19 pandemic. So those 2 really stood out. The second category, it says, is gold. Similar to treasury bonds, gold is often seen as a safe haven asset during times of economic turmoil. After doing the same thing for gold that I did for treasuries, I asked for a list of gold ETFs available in the market that were low cost. Came up with a list of 4, GLD, the Spider Gold Shares ETF, which is well known in the market, IAU, also very well known, which is iShares Gold Trust, and then 2 that I wasn't as familiar with, SGOL, the Aberdeen Standard Physical Gold Shares ETF, and DGL, the Invesco DB Gold Fund. And so I again asked ChatGPT to tell me how they performed during past recessions. I think GLD was up 5% during the financial crisis in 2008 and over 25% during COVID-19 pandemic. IAU was identical, 5% during 2008, 25% during the COVID-19 pandemic, whereas SGOL did not exist during 2008, 2009, but returned about 25% during COVID-19 pandemic. And DGL was negative 14 actually during the 2008 financial crisis and plus 21% during the COVID-19 pandemic. So again, if I were to choose a gold ETF, 2 of them stood out, GLD and IAU. They seem safe. They have the best track record, and they returned a decent amount during both financial crises. Third, it has defensive stocks. Defensive stocks are companies that tend to perform well in any economic environment. Examples include companies in the healthcare, consumer staples, and utility sectors. The third category is defensive stocks. I recently put out a video with 3 defensive stocks that I really liked. NWL, Newell Corporation, ADM, Archer Daniels Midland, and DOLE, Dole. And so I really like those companies. But I wanted to ask ChatGPT, and these defensive stocks included Procter & Gamble, Coca-Cola, United Health Group, Duke Energy, AT&T, very big companies that are well known throughout the industry. And so I asked what the returns of these stocks have been historically. To be honest, it was kind of a little bit of a mixed bag. These stocks did better, the overall stock market during those recessions. They were still defensive, but they didn't. It's not like they had an unbelievable return or did way better than the market or were positive in some of the years. They were negative, but less negative than the overall stock market. 4. Real estate. While the housing market was one of the catalysts for the Great Recession, real estate investors actually performed well during the downturn. And finally, for real estate, I asked ChatGPT for a list of low-cost real estate ETFs that investors may consider, and it gave me a list of 4 once again: VNQ, Vanguard Real Estate ETF, the iShares US Real Estate ETF, IYR, the Schwab US REIT ETF, SCHH, and the Spider Dow Jones REIT ETF, RWR. Now, I haven't done deep research in any of these, but I just wanted to, use ChatGPT and see how far it could get me without spending hours upon hours looking for investment ideas. And so I again asked for the returns that these ETFs had during the past recessions. And to be honest, they weren't really that bad, but they weren't really that good, especially during the 2008 financial crisis, since that was very much real estate related. VNQ had a negative 38% return, a negative 5% during COVID-19. Again, probably did better than the overall market. It says it rebounded very quickly, but to be honest, I wasn't very, very impressed with these returns. If I'm looking for something that's going to do well in a recession, I might just stick with the treasuries and treasury bonds and gold. So again, I think those are pretty good investments. I would definitely recommend TLT. I mean, just by putting TLT in your portfolio, you should be able to hedge a lot of, hedge a recession. You should be able to get some kind of return if a recession were to occur. If a recession didn't occur, a bond is still going to be stable, so you're not going to lose a lot of money. So again, no matter what you do, just remember, don't leave all your eggs in one basket.